Okay, good morning, everyone. Thank you for joining us here today. I think it probably makes sense. You might have heard of these two individuals before, but we should give them the opportunity to introduce themselves. So to start with, seeing as you're sat to my left first, Yoni, why don't you introduce us? Tell us a little bit about eToro.
Hi, I'm Yoni Assi. I'm co-founder and CEO of eToro. eToro is the world's largest social investment network. We have 37 million registered users and 3.5 million brokerage accounts of our customers around the world who trade US stocks, now also Dubai incoming ADX stocks, alongside crypto assets in a social network where everybody can see, follow, and copy the most successful investors on our platform. And it's been a very exciting journey over the past year. We've been celebrating our launch here in the UAE as an ADGM company for the past year, and very excited about the opportunities here.
Certainly very prominent here, given that your logo is right in my eye line. Rishi, yourself, CEO of Oak North.
Sure. Oak North is a commercial digital bank, started about 9 years ago, very specifically helps companies which are scaling up, so in their scale-up journey. We've lent about $15 billion to those types of companies across the UK and US over the 9 years that we've been in existence, and really, in our view, brought the investment banking type experience down to smaller scale-up businesses, which has tremendously helped them through their scale-up journeys. We believe we've helped create about 40,000 new jobs through the lending that we've done to that community.
All right, one of the things I love about Abu Dhabi Finance Week is the fact that they keep these sessions very short, which means I'm going to selfishly ask the question for me first. Look, let's put aside this question of what AI is going to do. Is it going to be transformative? Is it not? And let's just assume for a minute that it is. I think everyone here is probably in agreement with that. Instead, I'm going to ask you a question of, given that both of you are looking at AI and looking at how it integrates in your own platform and your own solutions, how on earth do you stay on top of all of these products launching constantly every day? Yoni, let's go to you first.
So you have to force yourself. We have 1,500 employees in eToro. And over the past 2 years, I found myself really forcing the organization to focus on AI and figure out what does it mean to be an AI-first company. Because the biggest threat is that the competition will be AI-first companies, and they'll be faster because they'll use all of the tools. So just as an example, last week, we paused all day-to-day activities of our 600 employees in the solutions and development group, and we said, you have 3 days hackathon. Here are licenses to Cursor, X.AI, OpenAI, like all of the tools that are available, and you see them online. And we told them, just build products now. Show us what you can build and launch within 72 hours. People were sleeping in the office, and they were amazed. Like for the first time, we had programmers who were actually just not writing code and told me, we can't believe what these tools are doing, right? So you have to detach yourself from the day-to-day and force the organization to use new tools. Sometimes it's very hard to do, but it's a must in an AI-first world.
Sounds like a big focus on culture there. Rishi, is that something you'd agree with?
So look, I mean, very similar approach for us. I think that the threat that you get from companies which are AI first, but also the threat which you get from business models which currently don't exist, which can exist because of AI, which will fundamentally change the way that consumers or your customer base effectively go and look for service, and therefore embed your potential offering in a way which just hasn't been done to date. So thinking about it almost both ways, right? Really from the customer perspective in terms of how their experience is going to change, and then really from your perspective as a provider, how that's going to evolve. And exactly as Yoni said, it's sort of doing hackathons, being across a lot of the technologies. There's so much evolution, which is moving so quickly. It's not like you can take people offline, go and send them away for a month and come back and expect them to do miracles. It has to be in line. It has to be as you're running, and it has to be embedded. And let's be frank, the technology is novel, and the ability to go all the way and actually deploy is still somewhat limited in a number of areas, right? So you always have to have a human in the loop, and the question is, with the human in the loop, does it take longer? Does it take shorter? What efficiencies are you getting? But it's like continuing to persevere through that, which as your point on culture, means that you have to break through the culture of, number one, being willing to try something different, but within that also being willing to say, actually, this isn't going to give me benefit necessarily immediately on.
So here's a question for me, though. You are focusing on AI, trying to build that culture in your organization. Does that then create an opportunity for you in comparison to your competitors and in a highly competitive landscape that you're already operating in?
I think unless you do that, I mean, like Yanni said, you won't be here in 5, 10 years' time, right? Because there will be AI-first companies which figure out how to actually fundamentally deliver for the customer in a much better, much more effective manner, and probably build a better business on the back of it because it's a more efficient business, it's a more flexible business. And I think the thing which you sort of see in the fintech space across and banking is you see a move to hyper-personalization. And hyper-personalization is more aided by tools like AI because fundamentally you can afford to go that much deeper on each individual instance because of the technology.
Yeah.
So I think it's almost like you can't afford not to.
You just can run like 10x faster, 100x faster, right? So there used to be this notion of a 100x developer, right? Or the 10x engineer. One person can do the work of 10 or 100 other people. Suddenly, your entire organization is 100x if you use these tools. So the pace of innovation is mind-blowing, and then you need to figure out how does that impact the strategy of my company, right? So we're in the business of enabling access to investments, but I have no doubt that we're on the path now of using AI to basically become your financial advisor, your family office, right? For everyone's, right? So suddenly you can get advice that is the advice of the smartest financial advisor in the world with the access to all of the global information and your personalized information to actually tell you what you should do with your money. So, and those notions didn't exist 3 years ago. They exist now, and they impact the strategy of any company.
All right, Yoni, connect the dots for us here then. The panel is meant to be titled Spurring Industry Growth. So what does it look like when we take this AI technology, this hyper-personalization, how is that going to change the shape of finance? Is it going to be just better products for retail investors? What does that look like? Democratization of finance?
I think right now, and again, you sort of see the different layers in wealth management, trading, investing. There's a lot of fragmentation, but I think when I look at our business, it's what you would consider like the family office, right? Everything from looking and understanding all of your sources of income, right? Through open banking, we can see how, when your salary is. We know, what are your expenses through open banking as well. Now we can manage, we understand taxes, right, across multiple jurisdictions. This is the favorite one. So taxes, tax wrappers, planning, estate, everything becomes extremely easy, and today it's extremely fragmented and complicated. So I think AI basically drives significant changes to the deployment of capital, to the efficiency of capital, and therefore also to the scale of capital.
Rishi, could we go to you? Similar question this time, but maybe you could come at it more from the impact that it might have on the SME marketplace and on small businesses.
Sure. So if you go through and actually have a look at how, I'll just go to consumer first and then come back to SME commercial. The banking experience has really evolved. You've gone from the stage where you typically had one provider and you almost did everything with that one provider, to a world where now that experience is pretty much disaggregated across a number of different providers. And typically you still have a traditional bank, but you'd have a traditional bank, you'll have someone to potentially transact money with, and you'll probably have someone to sort of invest money with, right? And you may have someone different to invest money with in stocks and shares versus into funds and asset management or not. But a much more disintegrated experience. Within the SMB commercial world, you still have very much a single provider, typically, in terms of your financial requirements, a traditional bank. And clearly with Oak North, we're working to pull that apart, right? And sort of break through that. So most of our customers end up having multiple providers. I think as you look at what with just technologies which increase the level of personalization, the firms which tend to be more innovative with technologies tend not to be the incumbents. So that tends to then push to more disaggregation. More disaggregation causes more complexity in managing that overall. So therefore, you need that layer which unites that back. So I think that experience is something which is happening both in the consumer world, also in sort of the commercial world.
Pulling on this thread a little bit, because I think you touched on it there, as much as we might all get excited about the impact that AI could have in the industry, are you seeing the same thing from the customer standpoint? Do they understand what the potential is here? Are they getting excited by the prospect?
I mean, look, our customers are all about, fundamentally, they want funding to grow, and they want to be able to move their money around in an easy basis, right, and transact efficiently, and not end up in like the endless loops which you end up with a lot of incumbent banks in terms of you want to make large payments, and your large payment gets stuck. And then you go through a wild goose chase for 3 days trying to sort of get it unstuck. So it's pretty like trivial stuff, right? But it's not necessarily trivial. It's important day-to-day stuff, right? But that's where the challenge is. Now, do they care if it's AI, which you're using for transaction monitoring, which you're using to actually create better algorithms to enable your transactions to go through on a smoother basis? They don't care. What they care about is fundamentally how you're delivering to them.
So I think we're seeing something a bit different because, again, our consumers are looking for new products. I'll just give an example. Because you now develop things to consumers and you don't even understand what you've delivered. So I'll give 2 examples. We signed with ADX this week to bring ADX shares, and I said, okay, but how do I know what ADX shares exist? What are their access to data? I go to our chat in eToro that we developed, and I ask it, what are the top 10 ADX shares? What are the top 10 ADX tech shares? What are their revenues? And it already knows everything, and we haven't done anything. It's just there because it has the access to the entire global information, and it's already there. I'll give another example of like how this is powerful for the democratization of capital and wealth. So I'm a fan of capital markets. You know, I love the stories of like Ken Griffin and Citadel, or Jim Simmons and Renaissance of this quantitative trading abilities. But I've always thought that, you know, it's extremely hard to build a quant team. But with these tools, we took our quantum machine learning team, started looking at the data to generate market-neutral long-short strategies, and, you know, and boom, it's like as you're telling an AI, look at all of the data, external data, internal data, now generate for me performance, and we're looking at the results, and I'm like, we're generating 20-30% IRRs in market-neutral strategies. I couldn't believe we'd be able to do that in a company where it's not necessarily the focus. So all of these tools that used to take a lot of effort to build in generation of capital are becoming now accessible, and we're making them accessible to our retail clients.
Well, I mean, that sounds like an incredibly interesting future that can be exciting for everyone involved. Since we're talking a little bit about the future, and we only have a few minutes left, I want to talk about what both of your thoughts are on what the future looks like for the markets. Where are we heading in the next year? Whether that be in crypto as well as traditional stocks. It's been a bit of a wild ride over the past 12 months. Yoni, let's go to you first.
So first of all, we've been enjoying very much the bullish markets, the roaring markets. This year, I think we met about a month ago. This was just before the election and before suddenly crypto going all the way, Bitcoin to 100,000. But our customers have seen significant scale of their wealth over the last a month and a half, both in crypto markets and the stock markets. I think generally, the sentiment in the market, it's going to be a very good year next year because everybody's expecting an extremely supportive US government of both crypto markets, stock markets, technology, sort of taking a bit off the burden of regulation and sort of streamlining that from the US, and that usually sort of generates the returns for others. But I'll just say that with a bit of a grain of salt, everybody you ask are saying that it's going to be a great year next year in the markets. And usually when the consensus is so strong that everything is going to be fine, something bad happens. So diversification is important in your portfolio, global diversification and asset diversification. So if there is somewhere a crash, you can manage it.
I said I was being selfish. I will take that on board myself. Rishi, same question to you.
So look, our visibility on the capital markets is less, but I would say in terms of the real economy is very, very high. So what we do is we also license our technology to some major US banks. Through that, we have about $500 billion worth of US commercial lending data going through our product and our model. So we have a pretty good sense in terms of the pulse on the ground in the US and UK in terms of actually how those scale-up, low-middle market companies are actually performing. And I would say that they've been incredibly robust all the way through the interest raising cycle, the inflation cycle, obviously the political tailwinds which business has in the US today, given the president-elect, I think are definitely positive. I think the clear unknown which we've experienced over the last several years is there are a lot of like unknown macro events which just come in and just hit, right? And clearly the world's a pretty fragile place at the moment. So I would say X anything very material in that regard, beyond and above where we are today, I think pretty positive.
And again, everybody's expecting interest rates to go down, right? Interest rates in capital markets is like gravity, right? He said he loves the boring business of just customers depositing cash. I think cash is boring. But when interest rates
if you can make money off cash, it's not boring.
Yeah, it's still boring, but you can make money, boring money. But when interest rates go down, generally people then start deploying their cash. People are like the largest asset managers in the world, but it's retail investors. So when you have $1 billion, like 5% interest rate is a lot, you might be saying, okay, it's boring, but it makes money. But when it goes generally under like 3%, and I think expectations are it's nearing there, then everything becomes interesting because
I'll put money on the fact it's not going to go below 3% next year.
I didn't say which currency.
on stage, everybody. Look, last question, 30 seconds each, and then we'll have to call it here. We are sat here in Abu Dhabi for Abu Dhabi Finance Week, so I think it's only fair that we bring the conversation finally to here. What is the role that Abu Dhabi and the UAE is playing in spurring growth in the finance ecosystem? Yoni, we'll go with you first, then Rishi, you've got the final word.
So we've seen here amazing growth over the past year as a region, right? So we look at our company here as a hub potentially for the region. We're very focused first on UAE and then understanding how can we expand eToro from the UAE to the region. I think that's a huge opportunity for eToro, and as Mike Milken told me, this is probably the place to bring the first million millionaires to eToro.
Very nice. Rishi?
I think the innovation, the financial innovation, the fact that we are sitting here at an event which is fundamentally sponsored by the regulator, the fact that Abu Dhabi has launched FinStreet as the first tokenized exchange across securities, just shows how much innovation is being driven from here and how open this market is to effectively encouraging innovators to come and expand. So I think that's phenomenal.
Well, on that positive note, only exists for me to say thank you, Yoni. Thank you, Rishi, for joining us both here today. Thank you very much.
Excellent.
Thank you very much.